Hello and welcome back to Investing for Generations, your channel for high quality stock research for long term value investors. And today I want to talk about Intel again because Intel just dropped over 6% yesterday. And the question is why Intel stock was such a dog on Friday. And as I said, they dropped over 6% on Friday to now $47.46. This is a huge drop, of course, for these big company, and so the PE ratio also dropped to now a little bit over 9. A PE ratio in the single digits, of course, looks like it's a cheap business. And the reason why it's dropped is just here. What happened? Once ahead of the pack in the computer processors, Intel is coming under serious attack in its core business. Rival big tech companies are opting to develop their own chips, with the latest being mighty Microsoft. On Friday's news that Microsoft is doing the go it alone thing, Intel stock fell by 6.3% on the day. So Microsoft is developing proprietary chips to power the servers that undergird its considerable cloud services. According to Bloomberg, it's also considering the development of different processors that would be the brains of its service line of tablet PCs. This closely follows last month's news that Apple is also going. Both tech giants remain tightly linked to Intel. The company's processor power a great many PCs with Microsoft's Windows operating system, to the point where such machines are often identified by the hybrid Wintel nickname. And Intel chips have been the guts of Apple's computers for years, based on long-term agreements between two companies. Of course, this is a big hit for Intel again, but it's not surprising. After Apple tried to make their own chips, now also Microsoft will try that. And so it's of course a bad news, but as I said, it's not really surprising. And the question is how much it impact Intel in the long run, because of course here on the channel we talk about long-term value investment. And so it's not about the noise yesterday or today or next week. It's about the long term. And when we look at the chart of Intel over the last 5 years, we see there's a lot of up and down, a lot of volatility. But in the end, since 2018, it's almost the same price. And we have a lot of up and down also this year. And I used this chance when the 7N chip was delayed to buy into Intel because I think it's undervalued. I explained that in my deeper analysis of the business. You find the link here up on the screen. And so over the time, I just bought more and more shares of Intel. And the question for me is now is with this bad news of Microsoft, maybe a time where I have to change my mind on this great company. And with all the bad news, we also have to remind ourselves that Intel have about 94% of the worldwide server chip market. And so they have still a great market position. And the data-centric business will just grow and will be more important for Intel over time. We see here that now it's around 50-50 on the revenue between the PC-centric business and the data-centric business. But the data-centric business will grow even faster and so will be more important in the future. And also we have to keep in mind, even with all the bad news around Intel lately, that we come from a market of around 55 billion in 2018 to in the future around 220 billion dollars. So there is really a lot of money to make in the future, and Intel still have a very good market position, and so the whole business will grow, not that much because it's really big, but they still will grow. And so the plan over the next 3 years is low single digit growth. As I said, not very fast, not sexy as other businesses, but at least they will grow with still a very high operating margin, and also even faster growing free cash flows. And of course you can say, yeah, you can plan for the future whatever you want, and who knows what will happen. But if you look in the past of Intel, then you see that they are very successful Here we just have a view back 3 years. And since then, the data-centric business increased revenue by 9 billion since 2016. The PC-centric business have a record profitability in declining market and significant free cash flows. And the 3-year guide beat the revenue by 6.7 billion and EPS by 1.27 billion. And so the revenue overall added 12 billion in the last 3 years, and the EPS increased around 64%. So overall, in the past, it was even better than expected. And so I have a lot of trust that also in the future, they can be very, very profitable. And also we have to keep in mind, even if they lose a lot of market shares in the sector, they are still the number one, they are still the worldwide leader by far. And also when you look at the revenue of Intel, AMD, Nvidia and Qualcomm, the four players in the market, then also you see the revenue of Intel is by far the highest. And so of course, especially AMD and Nvidia are just growing very fast, but they are still way behind Intel. They are still by far the number one in the world in the sector. And so, as I said, I tried to buy this company for a reasonable price over the last few months. And my latest buy was on December 10th for $49.21. And now with a drop down to almost $47, it's very likely that I will buy even more shares next week of Intel. And so for me, it's just like keep calm and carry on and just stick with this great company because they are super profitable, have a great balance sheet, great market position, and I'm very sure they will make money even in the future, even when the growing is not that high than with some other very sexy businesses around. But I stick with my boring Intel because they will be profitable also in 5, 10 or 15 years. And that's the most important thing. And then of course take the weekly insight to my portfolio and just start with the dividends. And this week I got my dividend from Coca-Cola of $16.38. And with that, just take a look at the whole portfolio. And as we can see, almost all of the positions are in the green. Gained a lot over the last few months. At the top, Walt Disney, of course, and Caterpillar, and so on. And if you're new to my channel, you find a deeper analysis to all of these companies on my channel. Feel free to check this out, and if you find any value of these videos, just subscribe to my channel and join me on this road of long-term value investment. And we also see Intel is just one of two companies in the minus right now. It's just Intel and Wells Fargo. And so we will see how this will go on. And also when we look at the pie of my portfolio, we see Intel now with 5.08% of the whole portfolio. And as I said, I want to add a little bit more. And so I think when we do the weekly insight next week, then we will see that Intel will just be a little bit bigger in my portfolio. And also what we see is 17% of cash. That's fine. That's a good mark just to react if maybe the market come back a little bit. But overall, of course, it's difficult to find good investments right now to reasonable prices. The only two companies I want to buy at the level right now is, or to add on the level right now, is Intel and Berkshire Hathaway. And I explained why also in other videos you find on the channel. And last but not least, here is the overall performance of my portfolio. I started this North American portfolio on the 2nd of December 2019. And since then it have a performance of 38.48%, which is nice and which is a outperformance to the S&P 500 of almost 20%. In the last week, of course, my portfolio suffered a little bit, especially by the drop of Intel and also by the drop of Air Canada. I think I will make a video about that also somewhere soon. But overall, a good performance, very good performance. I'm very happy about that. And we will see how this will work out in the long run. So that's it for today. Thanks for watching. If you like the video, please subscribe to my channel and join me on my road to financial freedom. And if you really like the video, please give me a big thumbs up. Tell all your friends that here is a community rising of long-term value investor with 1 or 2 high quality videos every week. And then see you next time with another analysis of another company. See you then. Take care. Bye bye.